This is Value Investing. I'm your host, Jun Kim. In this podcast, you'll learn everything related to value investing. Hello, value investors. Welcome to episode 23 of Value Investing. In the last two episodes, I talked about Joanne Greenblatt. Joanne Greenblatt is the founder of the New York-based hedge fund Gotham Capital, whose stock portfolio has achieved returns of 40% over a 20-year time period in the past. And he has written multiple books, and the book that I was talking about is called You Can Be a Stock Market Genius. In the last two episodes, I talked about investment basics that he introduced in his book. And in this episode, I'm so thrilled to talk about one of the special investment situations called Spinoffs. The reason why I'm so excited to talk about this investment area is because this is the area you can find a lot of undervalued investment opportunities. I'm going to explain to you why you can find a lot of undervalued investment opportunities here, and by going through some of the logics that Joanne Greenblatt laid out in his book. So I'm so excited. But before we get started, let me give you a quick disclaimer that this podcast is for entertainment purpose only, and it is your responsibility to consult with your investment professional for any investment decisions. Without further ado, why don't we get started? Spin-off can take many forms, but the end result is usually the same. A spin-off takes place when a company takes a subsidiary, division, or part of its business and separates it from the parent company by creating a new independent, freestanding company. In most cases, shares of the new spin-off company are distributed or sold to the parent company's existing shareholders. And if you read Wall Street Journal or any publications in the space of business, you'll see a lot of spin-offs every now and then. But not a lot of people pay attention to these spin-off opportunities because they just don't know how to analyze this situation. So before I get into the details of how you can analyze spin-off opportunities, let me give you the reasons why Joanne Greenblatt thinks that there are a lot of undervalued opportunities here in this space. So the question now is, why do we need to pay attention to this situation? If you look at historical data, in the past, stocks of spin-off companies and even shares of the parent companies that do the spin-off significantly, consistently outperform the market averages. One study conducted at Penn State analyzed spin-off stocks over a 25-year time period ending 1988. The study found that stocks of spin-off companies outperformed their industry peers and S&P 500 by about 10% per year in the first 3 years of independence. That's a huge incremental return, because if you look at S&P 500 and if you look at other hedge fund managers in the industry, people have really struggled to beat the market S&P 500 index. But if you look at spin-off companies, they have outperformed S&P 500 10%, not 1%, 2%, 10% per year in the first 3 years of independence. The parent company also did very well, according to study, by outperforming the companies in their industries by more than 6% annually during the first 3-year time period. And other studies have reached similar conclusion regarding the spin-off situations. Then now the question is, as a value investor, is this a coincidence? Or can this trend continue in the future? For whatever reason, can we capture the similar trend opportunities in the future? Also, the question that you might ask to yourself is when everyone finds out that spin-offs produce these extraordinary returns, won't the price of spin-off shares be bid up to the point where the extra returns disappear? Additionally, is there a way to have an edge as an individual investor in figuring out the best spin-off opportunities over institutional investors? So you may have a bunch of questions regarding this study finding, and you probably want to know, as a value investor, can I make some profits in the future in this space? The answer to many of these questions are yes. You can still make tons of opportunities, and the reason is that spin-offs are great spots to explore undervalued stocks for value investors because the undervalued opportunities, potential profits, are built into the system. Let me say that again. The undervalued opportunities and potential profits are built into the system in the spin-off space. Joan Greenblatt, in his book, mentioned 4 points why potential profits are built into the system, why you'll be able to find a lot of undervalued opportunities in the future, why you can make tons of money even when the studies have found that there are alpha in this space. So let me go over 4 points that Joan Greenblatt mentioned in his book, why spin-off area is a great space for you to explore undervalued opportunities. Number 1, when spin-offs happen, the shares of the new spin-off stock are distributed to the existing shareholders of the parent company. Think about it for a moment here. If you are existing shareholders of parent company and the parent company is trying to spin off small portion of its business and give those shares to you, what are you going to do with those shares? If you think carefully, you probably have invested your money because you like the parent business model, you like the parent company. It's not about the small share of one business that company has. So it's likely that you may not really want these shares that you just received from the spin-off, and you're going to sell this one to other investors as soon as you receive them. And the reason why this point is so important is because there's going to be a huge selling pressure of the spin-off companies when the shares are distributed to existing shareholders of parent company who may not want these shares. They invested their money in the first place because of the parent company's business model, parent company's products, services. Your investment goal was geared towards the parent company. And if the parent company just carve out some of their business, you may not be interested in investing your money there. And as soon as you receive these shares from the spin-off, it's likely that you will sell the shares you receive because first, you don't want to understand this small business and you just don't want to deal with a lot of complications coming from spin-off space. So, as I mentioned, there's going to be huge selling pressure in the market and it's going to lead to depressed stock price for recently spin-off companies. The second point Joan Greenblatt mentioned in his book is that the spin-off companies are usually small in size and it is not worth for institutional investors to invest their money. Let's look at the characteristics of a lot of institutional investors. Those are the people who manage billions of dollars and they need to be very efficient in terms of managing their money, managing their time. So they don't really have time to understand small cap or mid cap companies. They only focus their energy into the areas of large cap companies because even if you are super successful identifying undervalued opportunities in small cap space, it's not going to have any dent in your portfolio. It's not going to have any meaningful returns to your overall portfolio, so they rather focus their energy on big companies. And when a big company, let's say one of the companies in S&P 500 index, spins off one division or one subsidiary from their parent company, the shares will be given to these institutional investors who do not have time to investigate this company. And in many cases, they're not allowed to own companies below certain market size. That's just their company's policy. They might have to be forced to sell even if the companies distributed to them do have good business models. So the second point is similar to the first point in that it's going to create huge selling pressure in the market and it will lead to depressed stock price for a while. That's why I mentioned that study conducted at Penn State found that these spin-off companies have outperformed the market by 10% in the first 3 years of independence. So in the first 3 years, a lot of these large shareholders, a lot of existing shareholders of parent company are compelled to sell all the shares they receive from this spin-off event. The third point that Joe Greenblatt mentioned in his book is that there's going to be pent-up entrepreneurial forces unleashed from spin-off event. What he means by that is there will be a new company formed and it's going to be completely independent from the parent company, and there will be new executive teams and they will be given a lot of incentives to be successful in the future in the form of, for example, stock options, and their reward system is going to be directly related to the success of spin-off companies. So there's a lot of bureaucracy in the area of large companies, and if you spin off these small companies from the large companies, there will be entrepreneurial spirit unleashed from this kind of event, and it's going to give huge incentive to these highly intelligent executive teams to perform really well in the future. So that's one of the reasons why spin-offs do really well after it gets spun off from the large company. The fourth reason that Joe Greenblatt mentioned in his book is the motivation behind the spin-offs. Let's think about American businesses today. And you see a lot of mergers and acquisitions. One of the reasons why you see a lot of these mergers and acquisitions is because most executives seek to expand their empire, domain, influence by acquiring more and more companies even when the acquisitions come at the expense of shareholders. That's a really sad reality, but that happens all the time. I'm not really trying to denounce a lot of good executives in the American corporations, but they are the ones who actually climb up the corporate ladder. They have a huge ambition, and when they get to the executive team, they really have animal spirit and they want to expand their empire. They want to acquire more companies, even by paying very high premium price on top of whatever's the market value, because that's just the human nature. But spin-off is complete opposite of that human nature that I just mentioned. And it's likely that the management teams are shareholder-oriented and shareholder-friendly. Because if you do the spin-offs, then your empire, your influence is going to be diminished. And you still do that as an executive, that means you really think about shareholder value of the company, and that's really good for shareholders. And they're supposed to do that all the time. They're supposed to act in the best interest of existing shareholders, but that's not necessarily the case in the American corporations. So the very act of spin-off indicates that management team is concerned about shareholder value, and they're quite willing to give up their ambition and just do the spin-off to provide as much value as possible to shareholders. Okay, so we just talked about 4 points that Joel Greenblatt mentioned in his book in terms of why spin-off space is a great place for value investors to look for undervalued securities. A lot of these things are built into the system because of 4 points that he mentioned. Let me try to quickly recap what we just have discussed. First, when spin-offs happen, the shares of new spin-off stocks are distributed to existing shareholders of the parent company who do not really want these shares, which leads to huge selling pressure in the near term. By the same token, second, the spin-off companies are usually small in size, are not really worth for a lot of institutional investors. In many cases, they are not allowed to hold such companies with market capitalization below a certain threshold. So they're going to sell their stocks when they receive from spin-off event, which will also lead to a lot of selling pressure in the near term. So that's going to be really good for value investors to accumulate a certain portion of shares when stock price is selling at significant discount. Third, pent-up entrepreneurial forces are unleashed as a result of spin-off. A better compensation system and reward system will be in place, and management team will be held accountable for direct operation they are running, as opposed to belonging to bureaucratic system in a large company. Fourth, the motivation behind spin-offs are really good for shareholders because instead of trying to expand their empire, executive teams are more concerned about shareholder values. They are willing to carve out a portion of their business in order to increase shareholder value. So that's a really good indication that shows management team is shareholder-oriented and shareholder-friendly. Value investors should always look for opportunities to invest their money in undervalued securities. However, in some cases, it is not easy to find those areas. If you look at the current stock market, US S&P 500 index, right now the P/E ratio is about 24. It is very, very high relative to historical P/E ratio, and nobody would argue that the current market is undervalued. And it's probably at the high end of the valuation if you purely just look at P/E ratio. And there could be more upside in the future, but it's just not easy for value investors to find undervalued securities in the United States. So you might have to look for different places to find good undervalued opportunities. The reason why I think today's episode is important for you as a value investor is because it opens the door for you to look at different specific area, namely spin-off securities. And because of the reasons that Joel Greenblatt laid out in his book, there will be a lot of undervalued opportunities in the space. Hopefully throughout today's episode, I convince you that this is a great place for you to spend your time in order to find great investment opportunities. Now the question is, then what kind of things should I look for when it comes to investing in spin-off stocks? And there are things you might have to investigate before you're making investment decisions. So for that, I'm going to go over a couple of examples in the next episode and see how Joel Greenblatt invested his money and was able to produce 40% annualized rate of return for his clients. I'm so thrilled to cover all these topics, and hopefully you'll learn quite a lot from this episode. The one takeaway I really want you to bring home from today's episode is that Spinoff provides a lot of great opportunities for value investors. Okay, that's it for today's episode. I want to mention that 5-star review always goes a long way on whichever platform you listen to this podcast. This podcast is available on most podcast platforms such as iTunes, Google Play, Stitchers, TuneIn, and Spotify. If you want to leave any comments, please do so at valueinvesting.blueberry.net. I read every comment and feedback and try to see if I can incorporate them into the future episodes. Thank you very much and see you next time.